All right, should we get started?
Yeah.
Great.
Let me, Bethsaida, where's Bethsaida? In Syracuse. Good morning, Bethsaida. Happy New Year. Just
Happy New
checking
Year.
in and making sure with our new setup here that the audio and visual is okay and working well on your end.
It is, apparently, if you can
All
hear
right,
me.
good. We can hear you loud and clear.
I'm not sure Jesse's
Jesse's an open.
And
she's just out of the camera
he's
site.
lying under the table,
Jesse, are you there?
making himself invisible.
He actually stepped
Okay,
out.
maybe he stepped out.
Well, we'll test, then when we see a live body in those screens, we can do a little A/B
Yeah.
test there.
We need Jesse.
Happy New Year,
We
everyone.
need Jesse for quorum for audit.
Yeah.
For
Okay, so
audit?
then we'll wait.
Well, then we'll delay a little bit. But still, while we're waiting, a big thank you to Ed and the team for setting us up in these new facilities, where we will probably be for, let's see, February, March, April, May, June, July, August. We'll be doing this for a few months, right?
Yeah.
If all goes well, at the office renovation,
We need
what,
him
you guys
for
want to be
the
back in there by
SONYMA
October?
audit because Joyce is not here.
Well, a year from now is after Labor Day, my friend.
That's why I said that.
Christmas is after Labor Day.
That's why I said that.
There he is.
You know.
There he
In
is.
September.
Jesse's
All
back.
right.
He'll be back in September.
So in September, so
October board meeting.
October. Well, anyway, so get used to this place. We'll do a conference table setup slightly
Jesse's
differently
back.
next time if the
Jesse's back.
electronics permit. Jesse, good morning. We're just doing, it's Ken Adams' chair. We're just doing a little sound check with you. How are you doing there in Albany? Not too well. Can you hear us?
Yes, I was on mute.
Oh, that's
Trying
perfect.
this.
We wanted to make sure that we could also hear you. So thank you for joining us this morning. I don't know if you can see Bethsaida in Syracuse, but she's there.
Yep.
And the rest of us are, or at least enough of us are here at 25 Beaver Street in Lower Manhattan to begin our proceedings. And to do that, Linda, I think we can just turn to Nestor unless you want to do
We
that
can
officially.
turn to Nestor.
Let's turn it over to Nestor for our audit committee meeting, please.
Surprisingly, I'm going to turn things back over to Linda.
Here we go.
We'll take the requisite legal steps to formally open our audit meeting.
And for the first time, but not the last time today, I will note that Jesse Alzak, representing the Director of the Division of Budget, is with us from is with us via video conference from the State Division of Budget Conference Center at the Capitol Building, Room 131 in Albany. Emma Bethsaida Gonzalez is participating from the Syracuse Regional Office, 620 Erie Boulevard, Suite 312. Good morning, Bethsaida and Jesse.
Morning.
Morning.
Good morning. I will ask for motions and seconds to call to order the January 24th, 2019 Audit Committee meetings of the New York State Housing Finance Agency, the State of New York Affordable Housing Corporation, the State of New York Mortgage Agency, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporations. May I have motions for HFA, AHC?
So moved.
Thank you. A motion for SONYMA, please?
So moved.
And a second?
Jesse.
Second.
Thank you. A motion for MBBA and TSFC?
So moved.
And a second?
Jesse.
Second.
Thank you. As items are presented to each committee throughout today's meetings, these motions and seconds will be used unless specific items call for a different vote or unless any committee member or director wishes to record his or her vote differently. I'll note that Ken Adams is the agency's chair and will chair the audit committee meetings for MBBA, TSFC, and SONYMA, and Nestor Davidson is the audit committee chair for HFA and AHC. And will chair the committee meetings for HFA and AHC. For purposes of convenience, to make sure these meetings with respective agencies go smoothly, items shared by one or more of our agencies will be presented by Mr. Davidson.
Okay, we're going to begin with item 1, the minutes of the audit committee meetings of the various agencies held on December 13, 2018, which shall be deemed approved absent corrections from members and directors. Hearing none, we'll now move to the action items. Item 2, resolution recommending the approval of fiscal 2018 financial statements and schedule of investments. Gary? Or?
I don't think there's a mic. Is there, Alex? No, I think there's no microphone, right? I think you just talk.
Oh, there's no mic? Ed? No mic? No mic. Okay, you got it.
And just check that that they can.
Yeah. Jesse and B, can you just let us know when they start, if you can hear the presentation?
Good
Okay,
morning. Can you hear us?
I can hear.
we can hear.
Okay. Okay. Good morning. We have a lot to cover today. We're starting with the PowerPoint presentation, and I've asked everyone to be brief. I'll kick it off with just 3 quick comments.
Don't take that personally.
Great. Anyway, once again, we've had a good year, coming in at 5% under budget. Each area will discuss their portion of the presentation, which summarizes the fiscal year's activities for the 4 authorities. And 3, most of the numbers on the slides are based on the fiscal year from November 2017 to October 2018 unless specified. So, sometimes that can cause some confusion. And I'm going to turn it over to Gareth, Son, and Gary.
Good morning. So I'm just going to give a brief overview of the financial statements for the 4 agencies presented. Then we'll look at some of the highlights, trends, and activities that have defined our program for the most current fiscal period. All the agencies continue to do well throughout fiscal 2018 and improved on their 2017 performance. If you look at slide 4, this is a comparison of SONYMA, HFA, MBBA, and TSFC, their revenues, expenses, and changes in net position. The change in net position is really analogous to net income for a for-profit company or or agency. For HFA, the net position increased by $69 million, or 61%, primarily as a result of increased program production and housing plan money that we're seeking to save during the year. The SONYMA slide, and let me just explain the slide, pretty obvious, but the blue bar is obviously the total revenues and inflows, the red bar is the total expenses and outflow, and the green bar is the change in net position or the net income. For SONYMA, the income from operation was about the same for fiscal 16. It was about fiscal 17. It was about maybe up about 3.4 million. However, the total net income for SONYMA was up about 115 million. MBBA is just little activity. There were no new bond purchases or issuances during fiscal 18. Net income for MBBA was about 1.3 million. It consisted primarily of a small spread and fees charged to various municipalities. TSFC net income was 339 million, which consisted primarily of the tobacco settlement revenues. All bonds have been paid off for tobacco, and the expenses were down about 6% from last year, totaling about $500,000. And that's because there's been a reduction in TSFC activity during the year. Are there any questions on slide number 4? Okay, the next 4 slides are going to be focused on the municipal market and critical drivers for our businesses, and James McIntyre is going to present that.
Hey, everyone.
So 2018, not surprising, had about a 22% increase in the municipal bond market. One of the principal drivers was that as part of the legislation that was passed, the tax legislation at the end of 2017, prohibited advance refundings, which was a huge portion of the general municipal market. However, housing was not impacted because we've never been able to have the ability to do advance refundings, so it's something that it was really just the general municipal market. The other thing, too, that I think maybe where that's benefited the agency is, for example, in our December deal, we had about $150 million of retail. So overall lack of supply is good for an issuer like us who continues to issue, especially in a high tax state like New York, where individuals continue to benefit from the tax exemption. As I mentioned, housing was generally unchanged last year. A slight shift towards, in the percentage, but generally speaking, housing's been pretty consistent. And a lot of that has to do, too, with the fact that private activity volume cap remains the same at about $2 billion, and the issuers that are using it continue to use it, and that's, but generally speaking, multifamily decreased a little bit. I think part of that, too, is we've seen some declines, especially in a lot of states, on tax credit pricing, which other folks don't benefit from a robust, housing plan to sort of make up some of that gap financing.
James, can you just read that third bullet? What does that say?
We're the number one issuer of housing in the nation.
Thanks. I didn't see it on my screen.
And that's something I think that is here we handle a large portfolio that folks don't necessarily see in the general market because it's working, managing the 80/20s, doing refinancings on those things that don't necessarily show up in the traditional bond rankings. On top of SONYMA, HFA, the bond bank, obviously, and tobacco, and other programs that we manage. So as I said, the critical drivers of our activity has been the governor's housing plan. We continue to have the dollars that we need to support our projects, to make them work, especially as we've had to sort of be very nimble with volume cap and the projects that we're able to select. But as I said, that's been a principal driver of the resources that we now have available for the plan. Programmatically several years ago, we elected to use our resources with affordable housing as opposed to the 80/20 program which we had administered in the past. And obviously given that it's decreased the total number of units financed, but what we're really proud of is the fact that we continue to increase the number of affordable units that we finance as part of the program. SONYMA, this year, we did last year, we were on goal with, about $375 million in new production, but we continue to manage our portfolio, so refinancings, refundings, really looking at our broad credit exposure. Desmond's going to talk a little bit about it later, but we worked really hard this year to diversify our credit risk in our portfolio, re-hedge variable rate that had become unhedged, and to manage those programs. Again, we've worked, we did a bond issue in December to fund the neighborhood revitalization program. We're working on some other programs, potentially repurchasing some notes as part of the CRF program, and then we're also, Sherry can talk more about these, or Dina, on the renovation loan program. But again, from a capacity perspective, we continue to look at volume cap as a scarce resource, but something that we've used very effectively. And just one more note on that, as you may know, last year we passed a resolution amending our the last 4 years series resolution, which gives us the ability to now recycle within the indenture. So we're able to hold on to prepayments for longer to be able to sort of look at our forward calendar effectively for the first time internally and be able to look at where we can use recycled volume cap to continue to expand resources. So as I said, across the board, we continue to issue. Bulk of that is HFA. Some of that is the private placements, direct purchases. The MBBA has a small amount of bonds. Tobacco doesn't have any bonds outstanding, but the SONYMA, obviously continues to grow as well. And with that, I will turn it back over to Gary.
Hey, James, sorry, quick question.
Yeah.
How much volume cap? It's $2 billion?
For the state of New York, it's $2 billion, $19 million, I believe.
And how much of that did we get?
So last year we had about I think we had about $1 billion in total that came to us between SONYMA and HFA. That was the total that came to us.
And the other issuers?
HTC principally, and as you know, a lot of the IDAs throughout the state. We're still waiting, I think, Jason, to hear back on the sort of what volume cap wasn't used last year. But one of the big changes, too, was because of the tax changes in 2017, no one knew if private activity bonds would exist. Right. So in the past, we've had carry forward volume cap, but everyone was in such an urgency to sort of use every dollar.
They burnt it up.
They sucked it over. So that sort of carried over as part of last year's fiscal year as well.
Thanks.
Yeah.
Okay, so now we're going to go on to sorry.
Can I ask a question? When was the last time any municipalities wanted us to issue bonds on their behalf for the MBBA? Is there anything in the hopper? Are we?
Well, I think it was 2009, right, Alex, with the
2010.
2010. Oh, there was a refunding in 2010 for the city bonds and
For the city bonds.
for the school aid.
So that was a refunding. Right.
Yeah, but the last time there were new bonds issued was 2009.
That was a
We've been trying to get, and the problem is the MBBA legislation is
Funky.
difficult to work with, funky. So we've been trying to get amendments to the MBBA legislation to make it easier for us to do deals for municipalities.
Are municipalities knocking down our door to issue debt for them? Are we getting any sort of requests?
No.
You think municipalities are familiar with the program?
I think, a lot of times they go through their financial advisors. The financial advisors, the two or three big state financial know about us, but it's a difficult statute.
Yeah.
And we're trying to do something about that.
Okay, I was just wondering what we do to promote the municipal bond bank program. Not that it's our responsibility, but I'm not sure a lot of financial people that run these governments have an idea that they have a tool to issue debt on their behalf. And how much are we paying down a year?
How much we paying down here? Oh, the debt service payments that are coming in on the bonds. I mean, you have the same bonds outstanding, and we're getting enough money to pay it. We pay it down. We amortize it. But I don't know.
I don't know.
No extra payments.
No. I'm worried, but
Amortization.
our outstanding bond and indebtedness is shrinking.
Sure.
Yes.
Yeah.
But it's the same bond issues. They're just amortizing every year.
Yep. Okay.
You're referring to MBBA, Andy?
I'm sorry?
MBBA?
Yeah.
Yes.
And by
MBBA
far,
bonds.
the New York
Yes.
City bonds are so much larger than any other bonds that we have
No,
outstanding.
I'm just referring to MBBA bonds.
The New York City school bonds are the highest of all the MBA bonds by far.
I think if we get if we're successful in getting the legislation, then I think that's a conversation for the board about what our next step is then.
Do we have copies of the legislation?
It's not yet been introduced or been public. We can share the legislation we've previously put forward.
Do you mean the existing?
You mean the
So
existing?
you want
Yeah.
to submit?
Oh, I'm sorry, the existing statute or
No, what you were just talking about, the proposed changes.
We have drafts of those proposals that we can share with you.
Have they been submitted?
They've been submitted
previously?
internally through the executive chamber.
No, but I mean, in previous legislatures, have they been submitted?
I think last year was the first time.
last year the executive supported us moving it forward. We didn't find support for the legislation in either house, so it was never introduced. But we can share that last year's bill.
I'd love to see
Yeah.
that.
Thank you.
Yeah.
Andy, so now we're moving on to a more specific.
To answer your question, the bonds outstanding on the MBBA were about $402 million last year. This year, at the end of 2018, 363. So it's about 40-odd million is advertised down from previous year.
So now we're moving on to the SONYMA presentation with Sherry Echols.
Good morning, everyone. So SONYMA's production increased slightly over 2017. We had a good year. Maxed out between replacement refunding and our volume cap and a little bit of taxable. Pretty much all we could do as far as the program went with $370.8 million in purchases. We did $6.6 million worth of down payment assistance. 54% of our borrowers were able to get into their homes because of our down payment assistance program. And something we're really proud of is our performance of our loans. So while these are predominantly low-income borrowers, they perform 4% better than the state average as far as delinquency percentages. So 97.3% of our loans are current. And the little chart at the bottom was intended to kind of give you the proportions in terms of, down payment assistance is half, achieving the dream is 2/3, and then low interest rate is 1/3. The difference between those two programs, which are really our base products, is the AMI limitation. So the achieving the dream is for 80% or lower, and the interest rate is lower to correspond with the lower income. And then everyone between 80 and 115 gets a slightly higher interest rate, but also are eligible for the SONYMA programs and the down payment assistance. We do have some add-on features that are intended to meet some specific market needs. So for example, the Remodel New York loan enables the borrower frequently these are not homes in perfect condition, so this enables them to replace the roof, put in a new furnace, replace the flooring, things like that, and finance it into the mortgage as opposed to having to put it on credit cards where the interest rate's going to be significantly higher and it's not tax deductible. We coupled that program with our neighborhood revitalization program, which is using Chase settlement dollars, and this was specifically intended to incent the purchase of vacant properties. So this is available in a number of counties across the state, all of Long Island and New York City as well. And our production in that almost doubled over the course of the year. And then we have more loans now in process than we've actually purchased in the entirety since the program was introduced in 2016. So it's a complicated product, and it's only available for vacant properties. So it's not huge as far as dollar volume, but it is starting to make an impact in these communities, and we have a good bit of money left to continue the program. Then we previously had programs, Home for Veterans and Energy Star, which are still out there and available, but they haven't seen a lot of uptake in large part because the federal VA program is so strong and because there's been a lack of liquidity in new construction in this space, and the Energy Star is only available on newly constructed homes. So under the leadership of Ruth Ann and Dina, we started looking at other ways that we could meet the needs of the housing community in New York State and try to help more people become homeowners. So we started working on a program for Section 8 homeownership, which is intended to allow people with Section 8 vouchers to purchase homes in a more rational way. At this point, you can use a Section 8 voucher to buy a home, but it expires after 15 years. So if your payment is good for 30 years, then that kind of puts you in a pickle at the end of 15 years. So we restructured the way that these loans amortize to adjust for the drop in income that would occur in year 15, month one. We also have worked on a manufactured home program, which is the first in the nation that enables people to put mortgages on single or double wides in manufactured home parks on leased land. So we're really proud of that. And also we've been working on a resilient renovation loan, which would be taking our Remodel New York program and allowing it to be eligible for refinances so that individuals who are in the floodplain and need to make repairs to their home in order to lower their very high flood insurance premiums, people who are intending to age in place or have some other need to make their homes handicap accessible, or people who are looking to make their homes more energy efficient can refinance their mortgage and incorporate those costs, again, to keep them low, as opposed to retail installment loans or credit cards that would be higher interest rate and not tax deductible. So we're really happy that we're able to be in a position to offer new programs to meet the most dire needs, I think, of the New York State housing population. So in terms of the priorities, kind of the frames that we're using when we're looking at how we identify this, there's a couple different things that we're looking at. One of which is the income level. So obviously we're looking at where are the housing needs in the lowest income communities. And so we held steady in terms of that low income production last year. And then the next thing that we're looking to do is serve communities of color and other marginalized communities. So we saw a big increase in 2017, that dialed back a little bit in 2018, but still strong and still double almost what we did in 2016 in terms of that outreach. Examples of what that outreach looks like: we've increased our partnership and sponsorship and relationships with nonprofit housing counseling agencies that are based in these communities and specifically cater to minority populations. We've also used our SONYMA Spruce Up outreach to, we did one in the middle of Queens to kind of get directly into those communities and hands-on, make an impact. So those are kinds of examples, and participation in home buying fairs and things in those areas as well has picked up. And then the last thing that we were looking at, this is a statutory requirement for SONYMA, but also something that clearly is aligned with our mission, is to make sure that we're doing a large number of loans in federally designated targeted areas. So these are areas where 70% of the population is at 80% of AMI or lower. And so, we again saw a big increase in 2017 due to some targeted marketing and strategic outreach changes. And we dropped a little bit, but kind of held on to that growth for the most part. And last but not least is the Community Restoration Fund. And so this was an effort to enable us to do some foreclosure prevention on the SONYMA side, which is kind of something new to our wheelhouse. And so we have, in partnership with NJCC, which is a nationwide nonprofit that specializes in this, we've been able to purchase 570 non-performing notes. We have a partnership of a large network of nonprofit housing agencies all over the state that work in terms of doing what we call right party contact and directly reaching out to these homeowners. And so we've seen a very positive result coming from that, with 40% of the mortgages being modified, meaning 40% of those homeowners were able to stay in their home. And in terms of the remaining 60%, some of them are still in process, and we may still wind up with a modification outcome. And then others have either turned over the keys or been looking for soft landing by way of, we're giving them resources to get an apartment somewhere else so that we can foreclose on the house. So the equity that we put into this was leveraged against private capital and other resources to total a $112 million fund. So we put $10 million in and leveraged it to get a $112 million fund to be able to purchase all these notes. We used principal forgiveness, and we forgave interest arrearages. We did all kinds of different things in order to enable people to have an affordable mortgage remaining once we were finished with the process. And we are on target now to look to get a large chunk of that back to be able to reinvest in these note sales going forward.
Thank you.
Okay, so Mike Friedman's going to come up to discuss the MIF.
Good morning. On slide 15, which shows the mortgage recording surtax, the recording surtax peaked in fiscal year 2015, and since then it has declined between 8 and 20 million per annum. So that in fiscal year 18, it was 152 million, which is adequate to provide reserves for all of the new commitments and claims, if any, in the fiscal year. And for the, since October, it has remained roughly constant at 10, 12 million per month. And the surtax collection for the entire state, except for New York City, is about 5 million a month. And the variance between 10, 12, or 14 million a month is due entirely to commercial mortgage activity within the city. An additional $400 million mortgage or two on an office building or a multifamily building. And the activity outside of the state remains constant every month. The next slide shows new mortgage insurance fund project loan commitments by loan amount. HFA is the middle column, and I think what's significant is that in each of the 5 years commencing with 2014, the dollar amount of loans we've insured for HFA has increased. So that back in 14, it was a little over 100 million, and by 2018, it was almost $250 million. And it's by far the largest lender by loan amount that we do business with. And then slide 17, which is project commitments by unit. The previous slide was loan amount. And it shows essentially the same trend, that commencing with 14, with the exception of 14 to 15, but from 15 to 16, 17, 18, the number of units that we've insured on loans originated by HFA has increased. So that it has gone, in 15 it was about 2,000 units, and by 2018 it was 4,500 units.
Thanks, Mike.
Mike, are there other smaller lenders that we insure that just don't make the slide after a CPC?
Not really. With each of the commercial banks, with Chase, Citi, B of A, Wells, we do 1 or 2 loans a year, and the same thing with LIF and LISC.
Right.
So all 6 of them put together, we might do 10 loans.
Right. The CPC really is the non-government.
In part because outside of New York City, CPC is the only lender that can deliver loans to the New York State Common Retirement Fund. The New York City Employees Retirement System buys loans from each of the 6 other lenders, but the state fund only buys loans from CPC.
That's helpful, thanks.
Desmond is going to be coming up to discuss liquidity swap.
Good morning.
Morning.
Slide slide 19 is a summary of the liquidity and swap position at year-end. You will note that 5 major banks provide liquidity for all of our variable rate bonds. And the two biggest providers are Wells Fargo at 36% and Royal Bank of Canada at 106.7%. We are already engaged in negotiations to extend the facilities that are expiring in 2019 and expect to pay about 17 basis points lower in fees for our new 5-year facilities. With respect to the swaps, by early October, unhedged variable rate bonds had risen to 20% from the targeted 5% due to swap expirations. And therefore, we added 3 new swaps in October totaling $200 million, thereby reducing that percentage back to 5%. Details of the swaps are provided to the board on a quarterly basis. Thank you.
That was the last slide on Sunny May. Now we're going to move on to HFA, and James comes back.
Yeah. So just real quick on units we touched a little bit on it earlier, but with regard to HFA and sort of production, as I said, you'll see the trend has been with the change in the 80-20 program to a more affordable, the amount of units. We've continued to grow or keep constant the number of affordable units, but the number of market rate products have shrunk. In addition, we continue to sort of stay at a high level in terms of the number of projects that we finance. Look at the next page. And this is just looking at the affordable resolution right now. This is we did about $900 million in bonds finance, which was 37 projects and 5,400 units into the affordable resolution, which is now our main issuance vehicle for bonds. And so if looking around, we have about $3 billion of bonds outstanding, 3.2. About $2 billion of that is in construction, $1 billion in permanent. And so, we continue to see strong issuance in that and more projects converting to permanent over the course of this year.
Going along with what James had said, over the past year, $2.7 billion in bonds were issued for HFA, and there's a total of $17.7 billion of bonds outstanding. And the projects that were financed there were 40 new projects financed this year, with 6,995 units, and 6,380 were affordable. Mortgage loans increased by 7% over the past years. Fees went down a drop 3% to $74.7 million, which is primarily because of the increased focus on the affordable, but there's still a high amount of bond fees coming in. Any other questions on HFA? There's a slide on MBBA which we pretty much discussed already. The bonds outstanding, $362.9 million, no new bond issues.
The Andy slide. I'm sorry about that.
You jumped ahead, Andy.
I didn't realize it was coming up.
I like getting comments back. And so we pretty much went through this one already, and the fees total $217,000. We still have some money left because when the refunding was done and when the TSFC bonds were first issued, a lot of fees flowed to MBBA, but eventually the fees are not going to be enough to cover the costs allocated. TSFC, as everybody knows, the bonds were all called last year in fiscal 2017, June, but we continue to get the tobacco settlement payments and waiting for direction from the state as to when that money would be returned. We received $332.8 million this year, and which was the settlement revenue, and we could take out a portion for fees. That's it for the slides. Any other questions before Lou Roberts? Oh, excuse me.
And it happens every year.
Once the bonds are
Free money.
do we
I'm struck by
the revenue level?
the
Well, that was the revenue that would have covered some bonds, but all the bonds are gone.
Right.
But we still have the.
Right.
It's great. I mean, others, I understand, in other places that did tobacco bonds were not necessarily
Because
successful.
we did a great tobacco bond deal. Called it off early, and the money's flowing, and I guess when the state needs it, they'll ask us for it.
And for how much longer will we be receiving the payments from the settlement?
And
Go to the early 2020.
No, it's.
It's in perpetuity.
That schedule is just an estimate. It keeps going.
Keeps
As long as
going.
tobacco revenue comes in, we get it. Okay.
Yeah.
As long as people keep smoking?
Right.
Yeah. The more they smoke, the more we get. That's a kind
Let's
of
not
like,
be awkward, yeah.
That's awkward.
That's
Right.
awkward.
Yeah, that's awkward.
We should say that we want them to smoke less.
Will that apply to marijuana sales at some point?
Okay, now the meeting is straight.
Thank you for the presentation.
It's a fair question.
Is that a fair question, Ken?
I think it's a fair question. Ask Alex about his jewel.
The settlement with the marijuana is first.
So I think you all have seen Lou Roberts before. He's a partner from Ernst & Young and will be presenting the results of the audit.
Hi, Lou.
Good morning, everyone.
Morning.
Morning.
Make sure I can try and see everyone here. You should have in your package our audit plan or audit results presentation. And if I can draw your attention to page 3, which is the executive summary. The status right now, we just need some few legal letters and perform our subsequent events procedures up through today or tomorrow. And our plan is to issue an unmodified opinion on the financial statements, which I think you're all expecting to obtain. Our audit of AHC in a single audit will commence in April. Our scope is consistent with the plan that we communicated to you back in September. And as far as high-level results, agency's analyses over accounting matters are appropriate, reasonable judgments were made, especially with respect to OPEB and the pension liability and a reserve for uncollectible loans. I don't know if Gary had mentioned during his review of the financial statements, but you implemented GASB 75 this year, which has to do with the OPEB liability. That did not have a significant impact.
OPEB stands for
Other post-employment benefits, so the retiree medical benefits. Back when GASB 45 was first implemented, there was an option to either record the liability up front or pay as you go. HFA, along with a few others, not many, elected to record the liability up front. So with the adoption of 75, it did not have a significant impact on the financial statements. What we do, if you look at our opinion, we'll have an emphasis of a matter with respect to the implementation of GASB 75, just as we did with GASB 68, which had to do with the recording of pension liabilities. That was about 4 or 5 years ago. There were no corrected misstatements or uncorrected misstatements that we identified, and that's because we worked closely with HFA throughout the course of the year in the implementation of GASB 75, so we were kind of lockstep the whole way so that there were no surprises towards the end of the year. The entity level controls and other internal controls are designed effectively, and once again we received outstanding cooperation from the agency. The next page, again, is just an overview of the areas of audit emphasis. This is consistent with the presentation back at the audit plan. These are the significant accounts that we audit, and you'll see that there were no issues that we noted as a result of our testing procedures. I'm not going to go through each one of these items and tell you all about our auditing procedures. You can read that if you'd like. And then also the summary of required communications on page 7. This is just a summary page. All of the detail is behind it, but I just want to go through some of the important ones. Again, our plan scope and the timing of the audit was consistent with what we had planned and communicated to the audit committee. The accounting policies are in accordance with generally accepted accounting principles, and there were no deviations. Again, there were no misstatements that we identified. There were no material weaknesses or significant deficiencies. There was no fraud or non-compliance with laws or regulations that we identified. And as you're aware, the agencies have to comply with TSFC Act, so we actually looked to make sure that everything that was supposed to be reported to the state last year was in fact reported. We issued a schedule of investments, which is another item that's required by the agency, so no issues noted there. no difficulties encountered during the audit, no disagreements with management. With respect to external confirmations for the investments, cash accounts, debt, there was no limitation of our scope. Management did not push back. We were free to send out whatever we wanted, and the results of those confirmations came back without any exceptions. And just in summary, there were no findings or issues with respect to the oversight of the financial reporting process. So that concludes my brief remarks, and I'd be happy to try and answer any questions you might have.
Okay.
This is on Nestor.
Yeah, well, I'm happy to yield the floor. I have no questions. It looks great. Thank you.
I'm just curious, this is my first year being on for the beginning of the year audit. What's your policy on rotating partners, and how do you deal with that issue that I know has, been increasingly hot over the last few years?
Well, actually, the state requires that audit partners serve no more than 5 consecutive years on the audit engagement. So while firms have a policy that is in alignment with the SEC of 7 years, the state is actually more aggressive with that, and it's 5 years. So we have a rotation for, this would be my 4th or I think 5th year. So I will probably be 4. So one more year, which lines
You should
up.
figure
with
this
our-
out, by the way.
Losing track. Time just goes by quick. So it's 5 years for the state. So all state agencies that have to comply with the PAAA Act have the same requirements.
Thank you.
Other questions?
I just want to say Lou sent in a really good team this year.
Oh, and I
Worked well.
apologize. I'm
Oh,
joined
there
by
he is.
Vincent Halloran, who is the senior manager on the agencies. This was his first year, so even though there's partner rotation requirements, it's good always to have another teammate, kind of fresh set of eyes. We are always cycling new people as well.
I want to congratulate the county team on a job well done.
Thanks.
Your performance of these results.
Yeah, and this is a printout, double-sided, of the 4 reports. So there's a lot for the small team to prepare, and it's a lot of effort to get to this point, especially with the move that you had last week. Thank you very much.
Thank you.
All right. Then before we proceed with the resolution, I just want to note that Linda Baldwin, representing the Secretary of State, has joined us in the Capitol building. I also understand that the angle may make it hard to know who's speaking, so it may make sense that unless when you speak that you let everybody know who the question is coming from, just for the benefit of those participating by video. So now before all 5 committees is a resolution of the audit committees of the New York State Housing Finance Agency, the New York State Mortgage Agency, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation, reviewing and approving audited financial statements for fiscal year 2018, assuming the first and second previously entered for HFA, SONYMA, MBBA, and TSFC committees. All in favor, please signify by saying aye.
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 The motions are carried and the resolution adopted.
We move to item 3, resolution recommending the approval of the 2018 HFA audited supplementary financial information, other financial information, or OFI report. There will be no discussion of this item unless anyone is eager to discuss.
Sorry.
So now before the HFA committee is a resolution of the New York State Housing Finance Agency, reviewing and approving the audited supplementary financial information report, assuming the first and second previously entered for the HFA committee. All in favor, please signify by saying aye.
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 The motion is carried and the resolution adopted.
Move to item 4, resolution recommending the approval of the internal audits Sterling National Bank audit report for SONYMA. Steve?
like to start by entering a plea of not guilty.
Don't they all?
You didn't give your name.
Right, and advice of counsel.
Luckily, you've got a few of those around.
Item number 4 is the servicer audit of Sterling National Bank. Here we looked at the mortgage records and the systems of internal control for the single-family mortgages that are serviced by Sterling as of 12/31/17. As of our audit date, they were servicing approximately $112 million in loans. Sterling National Bank is a subsidiary of Sterling Bancorp. They had about $30 billion in assets as of 12/31. On October 2nd of 17, Sterling National Bank merged with Astoria Bank, thereby becoming the servicer of SONYMA loans. They've also entered into an agreement with a subservicer agreement with Dolan Mule Mortgage Inc. It's located in Lake Zurich, Illinois, and they specialize in acquisitions, originations, impaired loans, as well as servicing residential and commercial properties. The bank is participating in all the agency's bond issues. You can make payments at their branches or lockbox operations, and their deposits are FDIC insured. The results of our audit was that we were able to generally satisfy our audit objectives. We have 4 items in the report. Management has responded to those items, so we're going to ask you to accept the report.
Questions? Okay.
And now, before the SONYMA Audit Committee is a resolution of the Audit Committee of the State of New York Mortgage Agency reviewing and approving the internal audit Sterling National Bank audit report, assuming the first and second previously entered for the committee. All in favor, please signify by saying aye.
Aye.
Aye. The motion is carried and the resolution adopted.
Item 5, resolution recommending the approval of the internal audit SONYMA Mortgage Insurance Committee audit report. Steve?
Okay, here we looked at the accounting records and systems of internal control for the MIS Single Family Program as of 3/31/18. As you know, MIS Single Family concentrates on providing primary mortgage and pool insurance to mortgages that are purchased by SONYMA. As of our audit date, primary mortgage totaled approximately $39.5 million for about 967 loans, and they had a principal value of about $160 million. For pool insurance, it amounted to about $480 million for about 26,000 loans, and I think the principal value is about $2.8 billion. For reserves, primary mortgage had approximately $7.9 million, and for pool insurance, it was $96 million. Primary mortgage insurance is required for all loans that do not meet the minimum requirement of 8%. Genworth Financial provides the majority of the PMI for SONYMA loans. However, the single-family program does issue primary mortgage insurance for mortgages that do not meet the Genworth underwriting criteria. With the revitalization with the inception of the neighborhood revitalization program, the single-family group is now issuing more PMI policies. Also, Genworth does not insure any mortgage that has an LTV of 110% or more. For pool insurance, regardless of the LTV, the mortgage requires a valid and effective pool insurance policy from MIF. The premiums are paid by SONYMA. Master policy is issued, in which they basically guarantee that the agency will be reimbursed for any loss due to default up to the stop loss limit. They can accept or reject any loan in the pool, and a reserve of 20% of the stopgap is created. The primary funds for the programs are from the New York State Mortgage Surtax. And also the program is rated at AA1 by Moody's and AA+ by Fitch. The results of our audit was that we were able to satisfactorily achieve our audit objectives. There were no items in the report. We did discuss minor issues with management and resolve. So we're just going to ask you to approve the report since it's a response from management.
Steve, how often does it happen that a mortgage is rejected for, being covered by the pool? On a kind of case-by-case, but you said there's an allowance for that, but does it ever happen? And who makes that judgment?
Sure, it has. I don't have the answer to that, to be honest with you. I would assume it has to do on whether the policy or whether the mortgage goes beyond the criteria.
So the MIF provides primary insurance for about 150, 200 loans per annum. Loans that come out of specialty programs such as Habitat for Humanity or are rejected by Genworth, generally for low FICO scores. And we do a second look and try to approve them for PMI. For pool insurance, very few loans are, if Genworth is willing to do the PMI, they virtually never get rejected for pool.
It's a possibility.
Virtually, if it's good enough for PMI, it's good enough for pool.
Right.
That rarely happens.
Right. Good, thank you.
Thank you.
All right, then now before the audit, the Sunny May Audit Committee is a resolution of the Audit Committee of the State of New York Mortgage Agency reviewing and approving the internal audit single-family mortgage insurance audit report, assuming the first and second previously entered for HFA. All in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted.
Item 6, annual evaluation by the audit committee. Information item.
I'll note that the questionnaire for the annual evaluation should be completed and emailed or faxed to Gary Weinstock on or before February 28, 2019. The results of this performance evaluation will be presented at the next meeting of the committees, which will be held on Thursday, April 11th.
Can I ask one small favor on that? Normally what I do when we get the printed version is I just rip out the page and I fill it out. But since we only had electronic, could you send us that just as a one-page thing?
Absolutely.
Thank you. Great. Apparently there's no unfinished business, so I will ask for motions and seconds to adjourn each of the 5 agency members and directors committee meetings.
So moved.
Second.
Assuming the first and second previously entered for all 5 committees, all in favor, please signify by saying aye.
Aye.
The motions are carried and the meeting's adjourned. The next audit committee meetings are scheduled for Thursday, April 11th, 2019.
Next up is governance, right?
Next up is governance.
The next meetings are the governance committee meetings of the New York State Housing Finance Agency, the New York State Affordable Housing Corporation, the State of New York Mortgage Agency, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation. Good morning, everyone. For our governance committee meetings, I am going to turn things over to Linda, who will take the requisite legal steps to formally open our governance meetings today.
I will note that Jesse Olzak, representing the Director of the Division of Budget, and Linda Baldwin, representing the Secretary of State, are participating in the meeting via video conference from the New York State Division of Budget Conference Center at the Capitol Building, Room 131 in Albany. And Bethada Gonzalez is participating from the Syracuse Regional Office, 620 Erie Boulevard, Suite 312. I'll ask for motions and seconds to call to order the January 24, 2019 Governance Committee meetings of the New York State Housing Finance Agency, the State of New York State Affordable Housing Corporation, the State of New York Mortgage Agency, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Corporation. Did we say the State of New York? Oh, Morgan, yep. Sorry, I thought I missed one. May I have motions for HFA and AHC, please?
So moved.
Second.
And motion for Sunny May, please?
So moved.
And a second?
Second.
And a motion for MBBA and TSFC?
So moved.
And a second. Agency Chairman Kenneth Adams is the Governance Committee Chair for HFA, AHC, MBBA, and TFFC, and Commissioner Wisnauskas is Chairperson for Sunny May and will chair the committee meeting for Sunny May. As items are presented to each committee throughout today's meetings, these motions and seconds, as you know, will be used unless specific items call for a different vote or unless any committee member wishes to record his or her vote differently. For purposes of convenience and to make sure that the meetings of the respective committees go smoothly, items shared by one or more agencies will be presented by Chairman Adams.
Up first, item 1, shared items amongst all the agencies are the minutes and governance committee meetings of the various agencies that were held on December 13, 2018. They shall be deemed approved, absent corrections from members or directors. Any corrections, members? Item 2, resolutions recommending the review and approval of mission statements of the agencies. I think we do this every January, right? Must be that time of year. And Alex is going to discuss this item. Good morning, Alex.
Good morning. So, as Chairman Adams mentioned, every year, in order to comply with the PAAA requirements that Ernst & Young mentioned. The agencies are required to review their performance in the prior year and match them to their mission statements, and the boards are requested to look at the mission statements as well as staff and decide whether they want to make recommendations to change those for the upcoming year. Over the years, the agencies have done that, and the boards have done that. This year, the board books include a detailed presentation which contains a lot of the material that was also covered in the audit committee presentation, noting what HFA, SONYMA, AHC did during the year. In addition, there's a very detailed explanation in the presentation in the book about other aspects of agency programs that are important to the mission statement, such as fair housing, MWBE, green bonds. So that's all in that presentation. You have it, and you're being asked to review that and ask whether you feel the mission statements are still appropriate, whether any changes are suggested, and to vote on the mission statements as they are. That's it. Nestor?
So I have a question about the fair housing accomplishments for FHA. And, you know, it's in the materials we got, we had some great progress on some fair housing matters for HCR as a whole. But it was sort of striking that we list, and this was something we had agreed to, I think, a year ago, a change for HFA specifically to have a goal around fair housing achievements. And it's conspicuous that of the, you know, sort of 4 areas, I guess, we call out specifically in the measurements for calendar year 2018, we don't list fair housing at all. And I guess I wanted to get some understanding of what's been going on with it. The mission statement itself talks about HFA's fair housing goals specifically, and how we think about those distinct from the agency as a whole. The materials we got from the agency, again, show great progress and involvement in kind of some measure of inputs, but we don't really have anything to measure outcomes at all, and I'm wondering what we're doing on that in terms of for example, location of our investments, in terms of you know, it's great to have creativity around fair marketing. Is it yielding what it needs to be? What do we do in terms of auditing that or looking at that in a kind of retrospective way? And so I guess as we're looking back over the first year where we really tried to put fair housing into HFA specifically, as opposed to HCR as a whole, I guess I would love some background or some information about what we're doing on that, because it's kind of conspicuous.
Sure. So in terms of fair housing, we've taken a kind of global approach to our fair housing initiatives in that they are cross-agency initiatives. So if you look around the work we've done around reentry, and making sure that people who are returning to the community after having served time in prison are not penalized for that in looking for fair housing. That is a policy we've implemented across the agency with our Office of Housing Preservation. So a lot of the success you see there is across the agency. Similarly, when you look at marketing plans, we've adopted the same approach to marketing plans across both the state agency and HFA. So these successes there are successes across the agency. Same with accessibility. We've done a lot of work around planning for disability and improving the representations and the requirements that we have of our developers, again, agency-wide, in terms of accessibility. Right now, we're in the process of revising the QAPs which are the qualified allocation plans that speak to how we allocate our low-income tax credits to better incentivize development within opportunity zones. So I think the reason you don't see a specific metric for HFA is because it's been a cross-agency effort, but we can certainly break that out and bring it back to the board independently.
I'll just note that in individual projects, we sometimes will have, that section of the project memo that talks about the goals, and occasionally it'll reference, not always, but occasionally it will reference fair housing. And I guess I would just encourage you to do that, to break it out a little bit. Just, I think all of these cross-cutting initiatives are really important, but I think it's important for us to disaggregate questions about, for example, kind of anti-discrimination and what we're doing to make sure that specific projects are more inclusive, which again, really important, really wonderful work. And then kind of strategic thinking about, the sort of multi-billion-dollar investment we're making every year. And obviously we have some limitations in our ability, on the pure bond side, on the, kind of 4% and bond side, to move that needle. But I do think it's important for us to be thinking about ways we can, as sounds like we're doing on the 9% side, what we can do on the bond side.
So just to clarify, I think what you're talking about, Nestor, is development within what we would call high opportunity areas.
No, I mean, I think that's important. I think that's one piece of it. But I think there are filters, and I know we were working at one point towards, before HUD kind of screwed everything up, but we were working towards, some set of filters about not just moving to opportunity, which obviously is important, but also thinking about, are our investments contributing to or not desegregation more generally, right? There are various ways we can, again, not necessarily for every project, but on a kind of holistic, longer term.
Right, and I should say Brooke Davis, who is the deputy counsel and leads our policy and fair housing units, as well as Nadia Salcedo, who's our FIHO director. We've been engaged in conversations with the Department of Education as well as the Department of Transportation, looking at whether or not we might be able to do some pilot programs around using housing as a siting for the type of work that you're talking about. We've been very involved with Nicole Ferreira and Jason Pearson. They've been really partnering with the FIHO unit to look at what further steps we can take. I think the Governor's State of the State address and book included work that we're doing around and then I think it was mentioned actually in the SONYMA discussion at looking at metrics other than credit scores for people entering our housing, and that will be something we're rolling out in the immediate future. As you know, the governor, the state was a litigant in the HUD litigation against their rolling back of the analysis for impediment regulations. The state is still adhering to that. So there is a lot of good fair housing work going on. I think we can definitely work with our F&D team and maybe kind of break out just like we have for the MBBA, I'm sorry, the MBA, MWBE work to clearly kind of call out maybe in some of the development memos when this is advancing one of our fair housing goals.
Great, that would be very helpful. I do think it's important to then aggregate that in some sense, so we have a sense of the board whether we're making progress, and we can do some benchmarking and think about longer term trends.
Yeah, we can definitely do that.
Okay.
Linda, I just want to add a couple thoughts to Nestor's remarks. And thank you for your responses to his questions. But I think it's really important. This is one of these things directors feel because we're a little removed from day to day that you as staff and leaders of the organization are so much closer to. But sometimes, since as we've discussed before, we kind of see projects at the end.
Yeah.
It feels like we're sort of being reactive. You perhaps are not in the allocation of resources, but if one weren't careful and one were simply reactive, you could see that we would take scarce state resources and perpetuate. We could if we weren't. I mean, you've had a good answer to explain how you avoid this, but one doesn't want to perpetuate some of the problems in discriminatory housing and around geography, for example, right? And so one of the controls should be, since we're moving to a regime, we've moved to a regime where we're really looking at supportive housing, and many of those projects require grant subsidies, not just loans and not just mortgage insurance, right? In the toolkit, there's some discretion on the grant side, right? And so the carrot and stick approach might be that if we see a project that really will address, these goals of fair housing and right some past wrongs, and we really like the project, right? And we can allocate grants to that in a discretionary way to reward that developer. Why not do that at the expense of a developer who's doing same old, same old? We talk a lot about Wyandanch Rising. That's a good project on a lot of levels, but that's not occurring in Garden City or, pick your basically historically white, well-off
No
community.
longer do multifamily development in Garden.
Right, but I'm just saying, that's a historically black community that got a big affordable housing project, which we're always talking about, and it's always great, but it's not, and it's a good project, don't get me wrong. But it's think about where it is and think about, I'm just using Long Island as an example, about the geography of these projects, right? So again, my rather obvious and not very helpful suggestion is that we think about when we do have that discretion to reward a developer who's doing something that really will advance these fair housing goals, that we double down, right? And that we also have conversations, and no doubt you do this with developers who are kind of doing same old, same old. Senior housing for old white people in Garden City, that's not hard. That's not hard. You got the point, right? But thank you very much, Nestor, for raising the issue. I think it's really important. It's also a good kind of beginning of the year issue, like the frame for the new year. Dave. I'm sorry, I'm picking on Long Island.
No, but I have a response, which is that in Wyandanch, the case, and this is kind of counterintuitive, but Wyandanch is actually having the effect of integrating that community by attracting folks to live in Wyandanch that otherwise would not be were it not for that project.
Right.
That I guess some could call that gentrification, but it's really not.
No, that's a good point.
These are new housing opportunities that have been created there.
Right.
But I think that that's the positive side to that story.
And I think Wyandanch achieves other goals, right? It's transit-oriented development. I think to both of your points, it's anchoring and economic revitalization in that region. There's commercial in the first floors of all of those.
YMCA is
Yeah.
next.
Yep. So it's a very interesting question, and I would just speaking on Nicole's behalf for a moment.
I've already sent it.
Okay, yeah, but I mean, this is kind of and I think this is Ken's point. These are kind of the questions we are engaged in every day, and certainly at the forefront, I think of our planning and conversations, and we'll figure out a way to make that more evident to the board.
Okay. I was listening to you, and again, this is my first January meeting on the board. And I'm not sure, were you waxing poetically, or were you quoting policy, and is there anywhere I can read about this? And I'm not familiar with the project that you're discussing, so I'm just like coming in, I feel, in the middle of a conversation, and I'm trying to follow it, and it was a little difficult to follow, absent knowing where maybe I could read about what you're discussing.
I've never been accused of being a poet, and Nestor put it much more articulately, so I probably just created a problem. But it's this, broader question of deploying these state resources for building affordable housing, and having certain goals, not just an apartment that a low-income family can afford the rent for, but thinking about helping people in cases around the state where there's been a history, for example, of resisting low-income people moving into the community, or people of color living in the community, and we have this history in the state. How do we, and these are, ultimately have been historically kind of goals that come from the federal government, maybe, but there's certainly goals the state upholds, right? So how do we know if we believe it's important to advance that as part of our mission, fair housing, how do we know as the projects are coming through the pipeline and securing resources so they can actually be built and people can move into these homes, are we perpetuating in some cases some not so good practices because we seek to reach this goal of X number of units per year and we're pushing and pushing and pushing? I mean, I think not, because I'm so sensitive to this issue, but I'm raising the question as, or are we, when we evaluate the success of the project, are we saying that's a great project because it's done this and this and this and this? It's, and you can't boil the ocean, do everything with every project, right? Like Wyandanch is good because it's transit-oriented and it's big and it's commercial and it's mixed use, and Dave is totally right. It's a great project. Maybe a bad example for me to have selected, but and to the extent they believe one of the objectives we ought to reach with these projects is
revitalizing a community.
Revitalizing a community and not perpetuating discrimination in housing policy, which, again, the country has a history of. Rather, when we can, integrating neighborhoods on a socioeconomic basis, on a basis of race, on a basis of just, building stronger communities, right? Are we achieving that goal as well? I don't know, Nestor, how'd I do?
Great.
Because this is Nestor's point, and I was just trying to say I think it's really important, and as the chair I want to raise the point at the beginning of the year and kind of echo what Nestor was saying. And Linda, thank you for your response. Just good for us to get a better sense of how you're reaching the goal. We believe it's in your hearts.
Can I add one little point? So I think the other thing I would add is oftentimes the projects that come to us have gone through a not insignificant local process. So we're operating sort of right at a 10,000-foot level above that. So they will have gotten planning approval from the local planning board. They will have got a lot of input from the community. They will have maybe negotiated a pilot. So lots of times we're sort of taking a second vet at that, and that it is something that, to your point, comes out of a community process, and that it has gotten to us because it's been through a year and a half at a community level getting
But isn't that
zoning change.
the very nature of what we do? We respond to applications.
That's what I'm saying. So I think a lot of times
sector, we don't dictate down and say what to build.
Right. But we do pick among what comes in, and we can direct a little bit and say that's not something.
We're not a bank. We're not just a bank.
Right.
Right.
And I would just say on top. Sorry, go ahead.
No, I was just saying, and that's what we sort of have programs that say, right, we want to do so much supportive housing, we want to do so much senior, we want to do, and so we tried to sort of express that to people to say through our term sheets of our subsidy dollars, to your point, which are very discretionary. These are the types of things we want to see, and within that, these are the apples and the lemons and the oranges, and so bring us things that look like that. Don't bring us, vanilla ice cream if that's not what we want. So we try to do that. We are, reacting to what people bring us, but we do have the ability to say, like, seniors and whatever isn't sort of checking the box for us, and we have other demands on our resources, so that's just not going to get funded at this time because it's not a priority. So, we take that into consideration. Nicole and her team do, and everything we do. Thanks. But to your point, and it's a good January reminder. We always will double down on that effort and make sure we're doing it more, and we can think about more specific goals.
So you're talking about a macro level. I guess I need to think about and read and understand better, and I'm happy to devote the time. But on the micro level, during my relatively brief tenure on the board, I've been asking questions on a lot of projects. Why does this qualify? Why, there's some broad categories, and very often the answer's been, an economic development kind of hybrid answer. And in my view is, who am I to question, the wisdom of the approval process prior to and separate from us, and do what we can. But to the extent where you're articulating broad policies that are in addition to, the Constitution and laws of the state of New York, I really maybe please send them to me and point me so I can read them, because I'm all for helping to achieve state policy, but I want to make sure that what we're doing is, to the extent my little role is involved, I want to make sure that it's in conformity with the law.
Yeah, absolutely. And obviously there's two sort of ways you see that, right? You're seeing sort of MIF insured projects, which I think is what maybe when we're talking about economic development projects that aren't necessarily getting, and then there's other ones where we have really more discretion where we're providing
the TOD in the suburban or in the smaller cities, people generally seem to think they're generally good for lots of reasons. Mm-hmm. And they're also viable financially, which is, of course, an important criteria. I mean, that's one of the problems with, state edicts as from other systems in the past in other countries. If the government says build this there, build that there, but then it's a private loan, and private contractors and developers, it's still got to work. It's got to be viable. So, to the extent there's any of these policies or laws that you're setting, I would love to read them.
We'll be happy to send you some
It's
material.
a very interesting issue, but again, so the way I see it, it's macro and it's micro. But I have pointed out, and sometimes we're all on the same team, but as a sole member asking some questions on, how do you know it's workforce? How do you know that people comply? And I think it's really hard enough to determine that we're complying with those without adding into it a whole bunch of value-laden criteria, which I haven't read anywhere. That's all. I mean, it's a very interesting discussion. And yeah, I understand we're not a bank. I understand that. But at the same time, we have to approve viable projects. I mean, every project's got this long, or at least detailed breakout of the components and the subsidies and the pilots that I've asked about a number of times. It's a very interesting topic. So send me whatever you can, and I'm sorry for going on a few minutes here.
Good question.
Yeah, no, I'm just, to wrap this up, I know we have a lot to do, sorry. I would just say...
You brought it up.
I know.
It's his fault.
It is, and I'm happy to take the blame for it. I'm happy to also talk to you, Jonathan, about where this comes from, and it's both federal and state, once you get the materials, and kind of walk you through the background. I would just say, in that interplay between micro and macro, accepting for the second the reality, which is this is state policy. The reason why I think it's important to measure this and track it in some way, and there are lots of different ways one could, is so that you can think holistically about the deployment of state resources, so that you can, as Ken so poetically put it, you have an idea about whether it's effective or not, whether, if you're approving, Garden City was, sued for fair housing violations and found to have intentionally discriminated. And so if the micro is yielding no family housing in that community, that, when you aggregate that across the regions we work in, may give you a picture of where this community process yields viable projects and not. And it may be that the state needs to rethink that balance between deference to localities entirely versus some more intentional choices. And you can't really make that decision without some data. So happy to keep talking to you about this and not take more time here. But I think
let's do that, because a lot of it depends on the definition of the word "it."
Yes.
Which you just used.
So why
don't we do it in a sidebar? I'm very interested in it. It's fascinating. I'm not, Garden City has not come up during my tenure here, and I'm not familiar with it.
It won't. I'll just note that Brooke Davis, who's the deputy counsel and FIHO reports into her, has joined us. Brooke works closely with Nicole as well as Ty McDonald, who leads our research unit, and we've been kind of plotting where our developments are. We've been trying to take a much more data-driven approach to this, and as I said, we will figure out a way to bring that to represent that in our reporting.
There might be
to
a
the
lot
board.
of. I'm not a negative. I'm really want to start with listening and getting informed, because this is, I think, the first time you've had this kind of discussion again over the last 5 months.
See what happens at these January meetings? Well, you open the cookie jar,
It's the right time to ask.
Right time to ask. All right,
Thank you very much.
Thank you, Jonathan.
Can I make a comment?
Please.
Yeah. That HCR not only does 4% credit projects with HFA, we do 9% credit projects with conventional lenders. And about a year ago, for example, the committee approved mortgage insurance on 2 CPC loans for low-income projects in Southampton.
Great.
So there's another universe of projects that meet that goal.
Thank you.
Workforce housing in that case.
There was a component, but it's
But
not
these-
so
Not
like-
excessive, yeah.
These two were largely low-income projects. One was in Spionk, and one was north of the village of Southampton, near the rec center.
Also one pending in Southall on the North Fork.
You hold it. Oh, good.
But
He's our Suffolk County
Your
expert. He's our Long Island
expertise.
expert.
What's that?
it's your expertise.
That's my backyard.
All right.
Okay, then now before all 5 committees is a resolution of the Governance Committee of the State of New York Mortgage Agency, the New York State Housing Finance Agency, the New York State Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, the Tobacco Settlement Financing Corporation, recommending the review of the mission statements, assuming the first and second previously entered for all 5 committees. All in favor, please signify by saying aye.
Aye.
The motion is, I apologize, the motion is carried and the resolution adopted.
Item 3, resolution recommending the approval of board self-evaluations. Alex, back to you.
Right, so every year, the board is asked again by the public authorities law to review its performance, and it's obvious from meetings like this, the board is participating and active. So we send out the evaluation form, and we get responses from board members. We received 8 responses. They were collated. I think I've placed in your folders we got a couple of late arrivals, and I added them to the previous tally that was included in the board book, and they're in your folders. And as you can see again this year, the overwhelming majority of the board is in complete agreement that the various categories are being satisfied. 2 areas elicited somewhat agree, it's either agree or somewhat agree, or as opposed to somewhat disagree or disagree. Only 2 questions really got 3 votes from the 8, with somewhat agreeing that the criteria were being met. One is the board setting clear and measurable goals for the mission, ironic given our discussion, and the other is whether board members have sufficient opportunity to research, discuss, before decisions are made and votes are taken. I think the measurable goal has come up before, and it's really driven by the notion that a lot of what the agency does is presented to the board for approval once the steps have been taken and it's almost there. So I think the board has in the past wanted to be a little more involved in what happens prior to the projects getting to the board, and the agency has responded over the last couple of years by having periodic reports to the board about pipeline projects to sort of give you a sense of what's happening. I think Ken was sort of addressing that earlier. And the opportunity to research and discuss and prepare before decisions are made for votes. Sometimes, we try to get the books to folks a week ahead of time. There have been instances where, circumstances have gotten ahead of us and we've sent stuff to you late, but we try not to do that. And obviously, since we have 5 agencies, you see something like today's board book is 800 pages.
720.
And because it includes the financials and all these for 5 different authorities. Normally, you would have 5 different boards getting 5 different books. Here, we have to do everything for 5. So that, I think, plays a role. But again, these are not the consensus. These are just 2 or 3 responses, and the bulk of the responses are clear that the board is in agreement that the various categories are being satisfied. So under the law, the governance committee reviews it. This is before the governance committee, and you're free to make any recommendations.
Let me just note, based on Chairman Adams' recommendation yesterday, we're going to reformat the PDFs of the materials with tabs that they're sent. We've been unable to achieve that goal on the website, so when we do an electronic distribution to the board, we'll be making the PDF more accessible
As you
to
can see,
everybody.
the tabs are available in your board books. They're available to us. For some reason, they're not available on the website version.
And the website's undergoing a transformation, so that may be a technologically possible in the future, but in advance, before we circulate, we'll.
I think if you download it to a PDF, you get the bookmarks. You can just go skip through.
Whatever it is, we'll make sure it is in the email as easy as possible, and try and prevent people from having to take that step.
Sorry, Linda. Alex, you mentioned something, and it occurs to me, maybe I'd like to ask for this, and Ruth Ann, whatever is best, maybe an info session for February, but again, New Year beginning. It would be really helpful just to have a review of what Alex referred to there as the pipeline, so we have a better sense, I just are reminded of how a project from start to finish goes through the approval process, so we know what's behind when we're ultimately presented with a project, and it's kind of almost a fait accompli, but for our approval, what was behind that process, how did who approached whom, who initiated the deal, how did it all come together? I just think that would be a good info session I'm feeling for myself, and I suspect others might find it helpful, and maybe we could do it while it's,
Our next education session is in April.
Great, so we can do it then?
We can do it then.
Remember, too far away?
Well, it seems a little, by April we will have.
Oh, sure, so we could do it
This
next.
is not a complicated
we
thing,
can
right?
move the education
This is like a
session
15-minute
to
thing,
February
a great
instead of April
PowerPoint we
if
could
you
each.
want.
Yeah.
Yeah.
Let's. I just think. I mean, at least I feel that way. That.
Well, we'll do it as an ed session.
Yeah.
Yeah.
Yeah. Exactly.
Yeah.
Fair enough. Nestor.
I'd just say, I'm reminded in these materials that we're supposed to be doing, and I think we've been doing it, but it occurs to me I'm not bringing it back up to mind. Quarterly pipeline reports. Is that? Have we been getting those?
Yeah.
Yes.
Okay.
I think that's what
I need to
that's
pay more
what, that's what
attention
Ken's
to those.
referring to.
Yeah.
Yeah, but I'm just sort of like the mechanics of deal origination and approval process and step by step for the larger programs anyway. And on another note, just to recognize Alex and thank you for the change you and your colleagues made last year to combine board actions and board meetings and even board materials. It may result in a 720-page book, but the point is the efficiency with which we now run these meetings, because we don't have to kind of keep jumping back and forth between agencies. That's much appreciated, so thank you for that change.
That's a Linda Manley change.
Thank you, Linda. Thank you both.
Although we have two committees and a board meeting today. But now before all five committees is a resolution of the governance committees of the State of New York Mortgage Agency, the New York State Housing Finance Agency, the New York State Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation concerning board self-evaluations. Assuming the first and second previously entered for all five committees, all in favor, please signify by saying aye.
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 The motions are carried and the resolution adopted.
The next two items on the agenda are consent items. There'll be no discussion on the following items unless board members or directors so desire. Item 4 is a approval of contracts with Wilkie Farr and Gamfer Shore, and annual review of legal services contracts with firms on the agency's non-bond panel. Any questions or comments from anyone?
Excuse me, it should be approval of all the contracts on the two contracts?
Approval.
Annual review and approval.
Oh, okay, that's what I just put out.
Yeah.
Linda, you want to
I will make that note.
and take us to the vote?
Now before the HFA, AHC, and SONYMA committees is a resolution of the governance committees of the State of New York Mortgage Agency, the New York State Housing Finance Agency, and the New York State Affordable Housing Corporation authorizing contracts for legal services, assuming the first and second previously entered for HFA, AHC, SONYMA. All in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution adopted. I'm sorry.
I just abstain from hiring where votes, so.
Okay.
Abstain.
Thank you. Thank you for
No, it's
we'll
not.
note that, Jonathan.
No Jonathan's abstention. Item 5, resolution recommending the approval of acquisition, disposition, and inventory guidelines and reports.
If there are no questions, then now before the HFA, SONYMA, and MBBA committees is a resolution of the governance committees of the New York State Mortgage Agency, the New York State Housing Finance Agency, and the State of New York Municipal Bond Bank Agency concerning the agency's property disposition guidelines and annual inventory and property distribution report, assuming the first and second previously entered for HFA, SONYMA, and MBBA. All in favor, please signify by saying aye.
Aye.
The motions are carried and the resolutions adopted.
The next two items on the agenda are information items. There'll be no discussion on these items unless committee members or directors so desire. Number 6 is annual self-evaluation by the Governance Committee.
Please note that this questionnaire for the annual evaluation needs to be completed and mailed or emailed to me on or before Thursday, March 1st, 2019. The results of this performance evaluation will be presented at the meetings of the committees scheduled to be held on April 14th. And just with the evaluations as we did for the Audit Committee, we'll circulate that separately in an email.
Great. Item 7 is review of a contract for the provision of an electronic records management system. Who can do that?
It's a consent item, so
Consent,
there are no
all right.
questions.
Mhm.
If there are no unfinished, I'm sorry, this is taking your part.
Please.
Assuming the first and second previously entered for all 5 committees, all in favor of adjourning the meeting, please say aye.
Aye.
The motions are carried. The meeting is adjourned. The next governance committee meetings are scheduled for Thursday, April 11th, 2019. Now we can move on to the board meeting.
All right. Happy New Year, everybody. Let's get started. Linda?
Hopefully for the last time today, I will note that Jesse Alzak, representing the Director of the Division of Budget, and Linda Baldwin, representing the Secretary of State, are participating in the meeting via video conference from the New York State Division of Budget Conference Center at the Capitol Building 131 in Albany, and Bethada Gonzalez is participating from the Syracuse Regional Office, 620 Erie Boulevard, Suite 312. Notice these locations have been made public, and the public has the right to attend and observe the proceedings from either location. Good morning, everybody. I'll ask for motions and seconds to call to order the January 24, 2019 meetings of the agencies and committees. May I have a motion, please, for HFA and AHC?
So moved. Second.
Thank you. And a motion, please, for SONYMA?
So moved.
So moved.
Thank you. Thank you. Motions for MBBA and TSFC?
So moved.
And a second?
Second.
A motion, please, for the Mortgage Insurance Committee?
So moved.
And a second? Thank you. A motion, please, for the HFA Finance and Program Committee?
So moved.
And a second?
Second.
And a motion, please, for the SONYMA Finance and Program Committee?
So moved.
And a second?
Mm.
Thank you. And a motion, please, for MBBA and TSFC Finance Committees?
No.
And a second.
Second.
As items are presented to each board and committee throughout today's meetings, these motions and seconds will be used unless specific items call for a different vote or unless any board member or director wishes to record his or her vote differently.
I now will turn things over to President Ruth Ann Wisniewski for her President's Report.
Thank you, Ken, and good morning, everyone. And even though we've been here for an hour and a half, welcome to Beaver Street. As you will obviously know, we moved. So all of the AHC, SONYMA, and HFA staff that was located at 641 Lex over a 2 sort of week period, but really concentrated in like a Thursday, Friday, Saturday. We moved 300 people from 641 Lexington to 415 Madison. Our facilities and IT teams sort of went above and beyond on this relocation, and I'm ever thankful for them for making it as seamless as it was. Just some fun facts, because you know I love fun facts. Our move included disconnecting and reconnecting 300 computers and redirecting our entire network, allowing our staff to seamlessly work on their computers and receive calls at their same phone numbers in our new location. We packed and moved over 600 crates of staff files and personal things. We filed and removed 450 dumpsters of trash. We shredded 1,500 boxes. We shredded 1,500 boxes of paper. We disposed of 1 truckload of recyclable e-waste. I don't know what that is. We carted away 131 tons of discarded furniture. That's insane. We imaged 345 boxes of documents, which when complete will total 8.3 million HCR page images that were converted from paper and stored electronically. And lastly, relocating our IT consultants who are working on our BAM project to 345 Park Avenue, which was about 65 desks and a lot of IT equipment. So most significantly, the staff is all sort of settled in. The space is great. It's very open. There's lots of light. It's a little smaller, but we don't mind being closer to each other when we have nice light. And so we will be at 415 probably, as we said, through September, and we'll relocate the board meeting back up in October. But it's been great. I mean, especially just because we've had really no business interruption. So thank you everyone for being so great with the move. This morning, the HFA and the SONYMA boards and their committees will consider various important consent, informational, and administrative items. The Mortgage Insurance Committee will consider insurance for projects representing 256 units of affordable housing in New York, Bronx, and Sullivan counties. As you would have to be aware of, the federal government has shut down, and unless you don't read the paper or watch TV. And while it has obviously an enormous impact on all of the federal workers, it will also affect us as an agency. So the biggest impact that we have will be on our Section 8 programs. So we have both a Section 8 voucher program, and we also have project-based contracts that that flow through us and that we manage. So generally, any development that has an expiring contract or was in the midst of a renewal during the shutdown is sort of most at risk. We have spent a lot of time looking at our entire portfolio of both vouchers and project-based projects to understand sort of the timing and our funding. We are, I don't want to say confident, because we're not, but we are generally confident that through the month of February, HUD sort of advanced enough funds to us to sort of be okay, for lack of a better word. It's obviously a sort of unclear when the shutdown will end, and so as we get another week or two into this, we will go into sort of severe sort of planning mode for what happens should the shutdown continue towards the end of February. We obviously are hopeful that that doesn't happen and that none of our voucher holders or properties will be impacted, but we have been spending a lot of time thinking about, should that happen, what we would and could do to make sure that individuals are not adversely impacted by the federal government shutdown. We've done some events, but I'm sort of going to skip through those because I have a couple other things to talk about. Early in January, the governor had his first cabinet meeting. There were some commissioners have left and some new commissioners have come along. Tax and Finance notably got a new commissioner. And so I think we are off to a good start in the third term for the governor. In the middle of January, the governor presented his 9th State of the State and Budget Address, which people may have seen. It was a very there is about a 300-page book, should you not be able to sleep in the middle of the night, if you'd like to read about all 250 proposals that were included in the governor's budget. It's very comprehensive. It's a justice agenda. For our part, we had a couple things that were in the State of the State that were very important to us. One is some efforts around limiting security deposits to reduce housing barriers for low-income families. A second one, which Linda talked about earlier, around helping families build credit and requiring our folks that work with us to holistically evaluate people's credit scores. Also, something that was talked about much last year but is sort of being revived and we hope will be successful this year is legislation requiring source of income protection and to further enhance our fair housing efforts and to get a statewide law on that. There are some municipalities around the state that have it, but there is not a statewide law. And also the governor talked about rent regulation, which while we anticipate will come up in the June session, is sort of very much in the conversation now as part of Budget 2. Two last things, I guess. I have been sort of busy and will continue to be busy meeting with the housing chairs. We have a new housing chair in the Senate, Senator Brian Kavanaugh from Manhattan, and obviously we have a new Senate Majority Leader, Andrew Stewart Cousins, who I will see today at 3 o'clock, and so we are making the rounds to talk to people about things that are important to us. And a week from Monday, should you find yourself with 4 or 5 hours with nothing to do, you can tune into whatever the state budget channel is and watch me do my annual budget testimony a week from Monday. And with that, I will turn it back to you.
Just a quick observation, Ruth Ann, that on what the HUD, the federal government, shutdown and the impact on HUD and on Section 8, and this is just not something to note. It probably has come your way already. But you might have noticed yesterday the governor basically directed SUNY and CUNY, to the extent that students have problems with financial aid or other forms of federal support during the shutdown, the message was, you figure it out. Like SUNY, CUNY, figure it out. So I could see, we hope this doesn't happen, right? But a situation where the governor simply says, well, the federal government is going to figure out how to transfer Section 8 vouchers, you figure it out.
Yes.
Which, not unreasonable, but...
And that is what we think about, right? Because we don't want the tenants in any of those situations to be negatively impacted. So to the extent that we can address that, we will address that.
That message, I figured you knew that.
Yes, we have, just so everyone, just by way of reminder, we have about 40,000 housing choice vouchers, so in the sort of actual voucher program, and then we, in our project-based contracts that we manage, we cover about 100,000 units of housing, so it's not an insubstantial number of people and units that are impacted across the state.
And landlords.
Yep.
And just for a point of clarification, because when people are sitting here saying, why don't we ever hear about Section 8 in that context, those contracts are with the Housing Trust Fund Corporation and not with HFA or SONYMA.
Yes.
So it is a topic of conversation at that board meeting, which you're all welcome to join this afternoon if you have nothing else to do. So.
Great.
Thank you, Ruth Ann. Linda's going to report on committee actions.
So the report of the audit committees for HFA, AHC, SONYMA, MBBA, and TSFC, the committees met and took the following actions earlier today. All 5 committees adopted minutes. HFA, SONYMA, MBBA, and TSFC recommended the approval of the agency's financial statements for fiscal year 2018 and received a presentation from staff in connection with the agency's activities during calendar year 2018. The SONYMA Audit Committee adopted resolutions approving the internal audit Sterling National Bank audit report and the internal audit SONYMA MIF audit report. All 5 committees adopted resolutions approving the audited supplementary financial information report, and all 5 committees received the audit committee's evaluation materials. Similarly, the governance committees for AHC, HFA, AHC, SONYMA, MBBA, and TSFC also met earlier today and took the following actions. All 5 committees adopted minutes. All 5 committees adopted a resolution recommending the approval of board self-evaluation. All HFA, SONYMA, and MBBA adopted a resolution recommending the review and approval of the agency's mission statements. The SONYMA Governance Committee recommended the adoption of changes to the ALCO policy. Actually, I apologize. That did not come before the committee. The HFA and SONYMA committees reviewed a contract for the electronic records management program. The HFA, SONYMA, and MBBA committees adopted a resolution recommending the approval of acquisition, disposition, and inventory guidelines and reports. All 5 committees reviewed the legal services contracts with firms on agencies non-bond counsel and approved contracts with certain law firms. All 5 committees received the governance committee self-evaluation forms. Perfect timing.
Well, I'm just going to turn it back over to you. We're now going to present items shared by HFA, AHC, SONYMA, MBBA, and TSFC. Linda will record the approval of the minutes.
If there are no corrections in the minutes of the meetings of the HFA, AHC, SONYMA, MIC, and the HFA Finance and Program Committee meeting held on December 13th, 2018, and the Finance Committees of SONYMA, MBBA, and TSFCs held on January 25th, 2018.
Correct. Yeah.
Shall be deemed approved, absent corrections from the members and directors.
Well, not hearing many corrections going back a year. Let's move, Linda, to the shared action items. Item 2, resolution reviewing and approving mission statements of the agencies. This item was also discussed earlier today at the Governance Committee meeting, so there'll be no discussion unless board members so request. Anybody want to talk about it again? Linda, to you.
Now, before all 5 boards is approval for the resolution of the State of New York Mortgage Agency, the New York State Housing Finance Agency, the Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation, reviewing mission statements, assuming the first and second previously entered for all 5 agencies. All in favor, please signify by saying aye.
Aye.
Aye. Aye.
The motions are carried and the resolutions adopted.
Item 3 is approval of the board's self-evaluation. We've got to do this every January. Let's do it again. This item was discussed at the Governance Committee meetings and is now before the boards. There'll be no discussion unless board members so request. Linda?
Now before all 5 boards is a resolution of the New York State Mortgage Agency, the New York State Housing Finance Agency, the Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation concerning board of self-evaluations, assuming the first and second previously entered for all 5 agencies. All in favor, please signify by saying aye.
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 Item 4 is the
The
resolution.
motions are carried and the resolutions adopted. Now you go.
I walked. Sorry about that.
No worries.
Item 4, resolution approving agency's financial statements for fiscal year 2018. Earlier today at the Audit Committee, several hours ago, a detailed presentation was made in connection with this item. It is now before the boards. Unless board members have questions or comments, we will move to the vote. Anyone have questions or serious? Okay. Linda?
Now before the SONYMA, HFA, MBBA, and TSFC boards for approval is a resolution of the State of New York Mortgage Agency, the New York State Housing Finance Agency, the New York State Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation approving audited financial statements for fiscal year 2018. Assuming the first and second previously entered for all 4 agencies, all in favor, please signify by saying aye.
Aye.
I'll take that as an aye. The motions are carried and the resolution adopted.
The following 7 items are consent items. There'll be no discussion on them unless board members so request. Feel free to, raise your hand or make some noise if you want to talk about it. So item 5 is a resolution approving the annual investment report and quarterly investment report. Unless board members have comments on the reports, we'll move to the vote. That was consent.
Okay. Now before boards and all 5 boards and the finance committees is a resolution of the New York State Mortgage Agency, the New York State Housing Finance Agency, the Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation approving annual reports on investments and a quarterly report on investments, assuming the first and second previously entered for all 4 finance committees. All in favor, please signify by saying aye.
Aye.
Aye. The motions are carried and the resolution adopted. Assuming the first and second previously entered for HFA, SONYMA, MBBA, and the TSFC boards, all in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution adopted.
Item 6 is a resolution approving the agency's annual procurement report for fiscal year 2017-18 and review of the agency's 4th quarterly procurement report. So unless board members have comments on these reports, we will move to the vote.
Now before all 5 boards is a resolution of the State of New York Mortgage Agency, the New York State Housing Finance Agency, the Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation approving annual procurement reports, assuming the first and second previously entered for the boards. All in favor, please signify by saying aye.
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 The motions are carried and the resolution adopted.
7 is a resolution approving the agency's Public Authorities Reporting Information Systems, or PARIS, filing report for November 1st, 2017 through October 31st, 2018. Unless board members have comments on these reports, we will move to the vote.
I'll note that approval of this, I'm sorry.
I just have
Yep.
quick questions.
Yep. Yeah, I'm sorry.
It just struck me that the numbers we're showing look a little bit different from the numbers we have in the audited financials, and I'm wondering if it's just a different accounting structure or timing.
It's probably different fiscal year versus annual. Which number?
Well, we just approved the fiscal year,
Yep.
And these are supposed to be fiscal year as well.
Right. So which numbers?
So, I'm just looking at my notes. Operating revenue, non-operating revenue. The sort of big bottom line numbers, I didn't go line by line. And it's not a huge difference, but, you know, for...
Is the PARIS...
The conduit.
Yeah, it's the conduit.
Yeah. For HFA.
Yeah, HFA.
Operating revenue, operating
Right.
expenses. Format that's the same for all the agencies.
Right.
HFA, you know, doesn't report conduit debt.
To Paris. I see.
So the PARIS has the bigger number.
I see.
Is that what you're saying,
Yes.
Esther? Yeah.
Yeah, we should note that we're required to report in Paris according to their very specific form. So there are things you may see represented in the Paris report differently than you would see represented in our audited financial statements or in material coming from the finance department. To ask any questions you
No, I'm
have,
just curious.
but
Okay, great.
Esther, thank you. And Sheila, thank you. So the difference is conduit debt is reported to Paris, but not in our regular.
yeah, the
Oh,
way
right,
around.
okay, sorry. Got it.
I should also note that the reason you're not seeing the AHC Paris report is because their fiscal year is different, and therefore we'll report on that in
We're going to
June.
try to make a change.
So now before the HFA, SONYMA, MBBA, and TSC boards is a resolution of the State of New York Mortgage Agency, the New York State Housing Finance Agency, the New York State Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation accepting filing under the Public Authorities Reporting System, assuming the first and second previously entered for all 4 agencies. All in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution adopted.
Item 8 is a resolution approving acquisition, disposition, and inventory guidelines and reports. Unless board members have a comment on this item, we'll move to the vote.
Now before the HFA, SONYMA, and MBBA boards is a resolution of the New York State Mortgage Agency, the New York State Housing Finance Agency, and the New York State Municipal Bond Bank Agency approving the acquisition and distribution of report, assuming the first and second previously entered for HFA, SONYMA, and MBBA. All in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution adopted.
Number 9, a resolution approving final annual program budgets. Unless board members have comments on this report, we'll move to the vote.
Now before the HFA and MBBA boards is a resolution of the New York State Housing Finance Agency and the State of New York Municipal Bond Bank Agency adopting program budgets, assuming the first and second previously entered for HFA and MBBA. All in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution adopted.
Item 10, budget and financial plan results for the fiscal year ending 2018. Unless board members have comments on this report, we'll move on to the vote. This is a pausing here to see if people have comments or questions.
Then now before all 5 boards is a resolution of the New York State Housing Finance Agency, the New York State Mortgage Agency, the New York State Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation approving budget and financial plans for 2018, assuming the first and second previously entered for all the agencies. All in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution adopted.
We have an additional item received under separate cover. It's the resolution approving HFA audited supplementary financial information, or the OFI report, which was mentioned earlier. This item was voted on at the audit committee meeting this morning. Unless board members have comments on the OFI report, we'll move on to the vote.
If there are no comments now before the HFA board is a resolution of the New York State Housing Finance Agency reviewing and approving the audited supplementary financial information report, assuming the first and second previously entered for the HFA board. All in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted.
The next item on the agenda is an information item. There'll be no discussion unless board members or directors request it. It's the current agency procurements in the lobbying restricted period. We'll now move to the item on our agenda that is to be considered for financing by the HFA Finance and Program Committee and the HFA Board. This is item 12, resolutions of the New York State Housing Finance Agency, Finance and Program Committee, and of the New York State Housing Finance Agency recommending approval and authorizing the issuance of Affordable Housing Revenue Bonds 2019 Series C refunding bonds in a principal amount not to exceed $140 million.
Are there any? James is here.
James,
There are
I know
questions.
James is in the room. There he is. Anybody have questions about this item?
Okay, I don't believe so. Then now before the HFA Finance and Program Committee and the HFA members are resolutions to be adopted that were transmitted in connection with this item, assuming the first and second previously entered for the committee and the members. All in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution adopted.
James, as they used to say, don't spend it all in one place. Item 13, the activity report for the Mortgage Insurance Committee for the period from December 1st, 2018 through December 31st, 2018. That would be last December, not long ago. Mike Friedman here to present the case. We're going to move to items on our agenda that are to be considered for mortgage insurance by the State of New York Mortgage Agency Mortgage Insurance Committee, including item 14, resolution of the Mortgage Insurance Committee of the State of New York Mortgage Agency approving 100% mortgage insurance on a $2.7 million CPC permanent forced mortgage loan for 467 Richmond Avenue, Buffalo, Erie County. Mike, you got a lot to cover there.
This is a neat project. It comprises the historic readaptation of a vacant church and 2 smaller adjacent buildings into 13 workforce housing units and 27,000 square feet of commercial space. Although there's no regulatory agreement, 12 of the 13 units are projected to be affordable between 100 and 117% of the Buffalo Niagara area AMI of $68,000. The insured loan amount comprises only 20% of the project's total development cost. There's $3.5 million in historic tax credits, a $1.5 million Better Buffalo loan, a $1 million private foundation grant, and $5 million in developer equity. The development team, Rachel and Ryan Heckel, are brother and sister, who come from a wealthy Buffalo area family. And because they're first-time developers, it will be a condition precedent to insurance that they retain outside third-party management. The project would break even with a pro forma 21% residential vacancy rate, a 44% increase in operating expenses, or 27% of the commercial space vacant.
Mike, thank you. Questions for Mike on this project in Buffalo?
I just want to say that as an aging rock and roller, I'm really pleased to see that there's a musician involved in this project.
Aging rock and roller.
Well, I guess you were all wondering about that board of directors talent show.
Then now before the Mortgage Insurance Committee for approval is a resolution of the Mortgage Insurance Committee of the State of New York Mortgage Agency approving the mortgage insurance and a commitment for the provision thereof for 467 Richmond Avenue, Buffalo, Erie County. Assuming the first and second previously entered for the Mortgage Insurance Committee, all in favor, please signify by saying aye.
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 The motion is carried and the resolution adopted.
Item 15 is a resolution of the Mortgage Insurance Committee, the State of New York Mortgage Agency, approving 100% mortgage insurance on a $2,341,542 CPC permanent first mortgage loan for 644 Riverside Drive, right here in Manhattan, New York County. Mike?
This project comprises the substantial rehabilitation and conversion of a rental building into 93 limited equity co-ops. Although the vacant units are available to potential purchasers at up to 120% of AMI, the maintenance charges are appreciably lower at between 52 and 55% of the AMI. This is an HPD PLP project, and in addition to that $2.3 million first mortgage, there's $15.8 million HPD subsidy, second mortgage subsidy loan. And there's up to $1.6 million in AHC grants to subsidize the purchase of up to 40 units. The project is being developed by SHUHAB, which is a subsidiary of the Settlement Housing Fund, which is a very active and highly regarded developer of limited equity co-ops. Since they were founded in 1969, they've developed 57 projects with 8,700 units. The project is located on Riverside Drive and 142nd Street, just west of the City College campus. The insured loan amount is $25,000 per unit, which equals 12% of the project's total development cost of $211,000 per unit. And the project would break even with a 17% pro forma vacancy rate, or a 17% increase in operating expenses.
Thank you, Mike. Questions for Mike on this? Could you do a 30-second reminder of HPD's third-party transfer program? That's where this came from, right?
Yes.
How's it work, Ruthann?
So the city has the ability to pull properties from the tax lien sale if they have certain sort of characteristics, like they're distressed or they are. So this is and then they pool them, and then they sort of RFP them, and then they award them to nonprofits who then renovate them for rental housing. So this project would have been pulled from the tax lien. This one's, I think, more complicated than that. I think this was there when I was there. And maybe for 10 years before I was there. Yeah.
But also, aren't they trying to do it? Aren't they trying to do it before the thing falls into a complete state of disrepair?
Yeah, so they pull it from the tax lien sale, so the tax lien can't get sold, and say because it's residential, because it's distressed, because
people
of
living
whatever, people living in that, and then they dispose it, and rather than the city taking it in REM,
right,
they just take it into sort of a holding entity, and then they give nonprofits sort of control to renovate them for home ownership or rental or whatever the right thing is.
Great project. Mike, thanks. Other questions for Mike on this project in Riverside Avenue on West 140th Street?
Then now before the Mortgage Insurance Committee for approval is a resolution of the Mortgage Insurance Committee of the State of New York Mortgage Agency approving mortgage insurance and a commitment for the provision thereof for 644 Riverside Drive, New York City, New York County, assuming the first and second previously entered for the Mortgage Insurance Committee. All in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted.
16 is a resolution of the Mortgage Insurance Committee of the State of New York Mortgage Agency approving 100% mortgage insurance on a $605,000 increase to a $5,630,000 on a Wells Fargo bank loan for Jericho Walton Apartments. This is in the Bronx. Mike, you want to walk us through this?
Sure. This project comprises the development of 90 all low-income units, of which 36 units will be set aside for homeless veterans, and 33 units for homeless youths aging out of foster care. It was originally approved by the Mortgage Committee back on July of 2016 at $5,025,000. They've come back about 2.5 years later, seeking a $605,000 increase to $5,630,000. It's something we're seeing fairly frequently, simply increases in construction costs. And in this case, the current project-based Section 8 rents are appreciably higher than were underwritten 2.5 years ago. So even with the increased loan amount, the income to expense ratio actually increases to 1.5.
In this type of situation, do you take a look at the construction costs to make sure that the increase is going to construction and not to something else?
We don't, but Wells Fargo does. So Wells Fargo warranties to us that, the use of the money.
For the project?
Yes.
Thank you.
If there are no more questions, now before the Mortgage Insurance Committee for approval is a resolution of the Mortgage Insurance Committee of the State of New York Mortgage Agency approving 100% mortgage insurance on a $605,000 increase to a $5,630,000 commitment on a Wells Fargo bank loan for Jericho Walton Apartments, Bronx County. Assuming the first and second previously entered for the Mortgage Insurance Committee, all in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted.
Mike, sorry, while you're sitting here, a question. You mentioned rising in construction costs, and I wish Ruth Ann were here when she comes back. This is for another day, but and it's not fair to put this just on you.
Nicole may be able to.
But Nicole can help. So I've assumed that most of the construction done in the world of affordable housing is non-union, and in many cases, right, I think that's true. But are there prevailing wage requirements that make the construction, the labor cost of the building low-income housing similar to union rates? Because if not, there's so much talk out there politically about imposing prevailing wage requirements on anything that comes anywhere near a public subsidy. So am I imagining a problem that doesn't exist because we already pay prevailing wage, or could this be a big problem?
So when there are federal funds, you're required to pay prevailing wage.
Yeah.
So if there's like a project-based Section 8 contract, when those prevailing wages are in effect, the cost of construction is approximately 30% higher than what we normally pay to build an affordable housing project. So it would have an impact.
And I should say, I think most of the bills that have been put forth, that when they want to put prevailing wage on public projects, quote unquote, affordable housing has been exempted from those bills previously. But we're kind of constantly monitoring the legislative process, and we can come back to you if we see the tides changing.
Well, with a new Senate majority, the tide, as obvious point, could change, and I suspect Ruth Ann will build into her remarks, whether she's asked or not, an answer to that question, right?
Yes. Okay. Yes, it's something we're watching
30%. Let's just remember that, right? Because you don't want to lose that exemption, right?
And it's an issue in our RAD deals. I mean, it's definitely an issue we're working on, but so far the bills that have come before the legislature have carved out affordable housing, and it's certainly something we're watching closely.
I've been worrying about this since the blowback over the Amazon deal executed by another agency we all know, and the degree to which that has just fueled the whole political thing about incentives and the need to keep, right? I mean, so there's other stuff driving this that has nothing to do with these agencies, but if those requirements were to find their way into the construction of affordable housing, Nicole, I just asked about the prevailing wage issue. And so I just think politically this is really tricky, right? A lot of misunderstanding of how incentives work, fueled by the Amazon thing where people really didn't understand what was going on. And now we're going to face, I think, increased political pressure around prevailing wage.
Yeah.
Okay, thanks. Thank you, Nicole.
We did take the vote on
We did. That was me hitting Mike up for one last question.
On Walton Apartments, so now we can move to the items for SONYMA mortgage insurance as well as the SONYMA board.
Why don't we do 17? It's resolutions of the Mortgage Insurance Committee of the State of New York Mortgage Agency and of SONYMA board recommending and approving 100% mortgage insurance on a $10,158,000 CPC permanent first mortgage loan for Chestnut Street Apartments in Liberty, Sullivan County. Mike?
This project comprises the construction of 37 supportive housing units for tenants with mental disability and 35 low-income units. In addition to the insured first mortgage, there's $10 million in federal low-income housing tax credits, 581A real estate tax abatement. And the State Office of Mental Health is contracting with the operator to pay 100% of the $770,000 annual debt service for the full 30-year term of the mortgage. The project is being developed by Ken and Sean Carney, who are experienced and well-regarded developers of affordable housing in the Hudson Valley. And this is the 13th loan that we will insure for entities controlled by Carney Real Estate with total exposure of $58 million. The operator is Rehabilitation Services, Rehabilitation Support Services, which has been in business since 1979 and provides mental health services in 13 upstate counties.
Mike, thank you. Comments, questions on this project from directors? Great. Important to do work in Sullivan County, Mike. You will know from reading sort of new Department of Health reports that Sullivan County is really one of the hardest hit places in the state in the opioid crisis. Yeah. It's horrible what's going on there. And there are no medical services. There's nothing happening.
I'm on the board of a not-for-profit. It's Easter Seals, New York. And we have a facility in Monticello, which has the poorest of all of the clients we serve, probably the poorest of all of Monticello.
Right. There's a declining population. There is very little work.
Yeah.
Affordable housing. This is really, I'm just reminding people of the context. Yeah. Because the place is in crisis as a county.
Now before the Mortgage Insurance Committee for approval is a resolution of the Mortgage Insurance Committee of the State of New York Mortgage Agency recommending approval of mortgage insurance and a commitment for the provision thereof for Chestnut Street Apartments, Liberty, Sullivan County. Assuming the first and second previously entered for the Mortgage Insurance Committee, all in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted. Now before the Sunny May Board for approval is a resolution of the State of New York Mortgage Agency approving mortgage insurance and a commitment for the provision thereof for Chestnut Street Apartments, Liberty, Sullivan County. Assuming the first and second previously entered for the Sunny May Board, all in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted.
We're now going to move to items on our agenda that are to be considered for financing by the Sunny May Finance and Program Committee and the Sunny May Board. However, 18 has been deferred, and 19 are resolutions of the Finance and Program Committee of the New York State Mortgage Agency and of the Sunny May Board recommending and approving the adoption of series resolutions authorizing the issuance of bonds thereunder. James is back.
Yeah, this resolution, as folks know, in the past what we've done is we've come to the board asking for approval for Sunny May's program over the course of the year. In this case, we're looking at a combination of both taxable and tax-exempt bonds. We anticipate with prepayments slowing down, we're going to have to use more replacement refunding resources. But generally, this will allow us to continue on through over the course of the year with what we're doing.
Good questions for James?
If there are no questions, now before the Sunny May Finance and Program Committee for approval is a resolution of the Finance and Program Committee of the State of New York Mortgage Agency recommending the adoption of series resolutions and the issuance of bonds thereunder. Assuming the first and second previously entered for the Finance and Program Committee, all in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted. Now before the Sunny May Board for approval is a resolution of the State of New York Mortgage Agency adopting a homeowner mortgage revenue bond series resolution and a mortgage revenue bond series resolution, each dated the date hereof. Assuming the first and second previously entered for the Sunny May Board, all in favor, please signify by saying aye.
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 The motion is carried and the resolution adopted.
All right. Linda is going to now take the requisite steps to go into executive session. I want to thank everybody who's been with us till this point. Are we going to call people back in the room after the executive session, or not really?
I do not believe it'll be
necessary.
necessary.
We'll be done. So to those of you who won't be part of the executive session, thanks for all the work preparing for today, especially in our new and temporary facilities here at Beaver Street. To Jesse, to Linda, who just had to leave, to Bethsaida in Syracuse, who I hope you guys will stay on. But thanks again for doing this from a distance, from doing this remotely. And again, everyone else, thanks so much for your help and great work, and have a good day, and we'll see you next month.
Okay.
Back here.
And we will be coming back into public session at the end of the executive session to confirm that no votes were taken during the executive session or in the event we need to take any further action. But I will now ask for a motion and second to go into executive session to pursuant to Section 105F of the Open Meetings Law to discuss the financial, credit, or employment history of a particular corporation.
What
had
you're
a
trying to
motion.
say is this court is adjourned.
And after convening in public session, after we go back to public session, I will confirm that no votes were taken. So I have a first. Can I have a second,
Second.
please? All in favor?
Aye.
Thank you. Into public session just to confirm that we have a motion and a second to go back into regular session.
So moved.
Thank
Second.
you. Thank you. I will announce that no votes were taken during the executive session. So with that, we are back into public session, and I will turn to the chair.
Motion to adjourn.
Assuming the first and second previously entered for all 5 boards. All in favor, please say aye.
Aye.
The meeting's adjourned. Our next meeting is scheduled for Thursday, February 14, 2019 at